If you're a day trader or you want to day trade, you need to learn how to actually draw support and resistance lines. It's one of the most important things if you want to successfully day trade. Otherwise, you would not know where to take profits, where to set stop losses, or where you actually enter the trade. Now, in this video, we're actually going to go over this whole topic, and it's actually a game changer for a lot of traders, especially if you're in option trading. Okay, now we'll deep dive into how to identify support resistance lines, and trust me, this is something that you don't want to miss out. Let's jump right in. Now first, let's talk about what actually is support and resistance lines actually means. What are these levels? Now think of these as the floor and the ceiling, right? And this is where stock or options are hanging out. Now what does that mean? So if you're looking at a support level, that means it's a floor. Now this is right here is a floor. You see this price was rejecting here so many times, and then it finally broke out. Now this became literally a floor. Like if you're sitting on the floor right now, right? You have your chair on the floor, hopefully. So that means it's holding your weight, and that means once we break out of a resistance lines, it becomes a support. You see this? This becomes literally a floor, and this is a floor now. Every time we come here, we bounce. Every time we come here, we bounce. Now once we break down, hold below, come back again, you get the point, right? This is called support levels. Now what are resistance levels? Resistance levels are super easy as well. Resistance levels are just ceilings. You have a ceiling in your room. If you throw a ball at literally at the ceiling, what happens? It comes right back down. So ceiling is just literally a line like this. Every time prices goes there, it gets rejected. Every time prices go there, it gets rejected. Now how do you actually spot these levels? It's all about observing where the prices has been bouncing in the past. Okay, all we look at is the past historic data, and let me show you on the chart. So the first things that we do here is we literally go and look for the levels on a daily chart. Okay, now I always recommend everybody to draw their support and resistance lines on actually a line chart. So if you go here, you will have a chart literally called line chart, and now you'll be able to draw some levels. So what we'll do is we'll remove all the drawings, and now we'll draw these lines again. So on a daily chart, on this particular chart, where do you see the prices being rejecting or bouncing over and over again? Now first things first, if you want to see, we have one rejection here. You see this price came here, rejected, try to come here again, got rejected again, now playing around here, and then finally broke down. Sweet. Where else? This is the daily charts. Now I don't like to draw too many levels on a daily chart. Only the reason why I actually look at daily chart is because I want to understand what's happening on a bigger picture. I draw most of my levels on a 60-minute chart. Okay, so what's happening on a bigger picture here? Price was in an uptrend, then it kind of made a little flag pattern right here. What's flag? We'll break it down in some other video. A flag is just a chart pattern which actually looks like a flag. Okay, or people like to call it, oh, it's a falling wedge, this, that. Man, everything's pretty much a flag. Okay, a flag is just a trend line and the price holding in a little channel. Price was holding in a channel, we finally broke out. Okay, what's happening here? Price resumed its original trend. Now let's go on a 60-minute chart, and when I go on a 60-minute chart, I always have extended trading hours here. You click here and make sure you're on extended trading hours. Okay, not regular, because if it's regular, it will only show you when the market was open. You see how much data you get literally when missing, but when we draw on extended, it becomes more smooth. You see more levels. You see these two different colors? That means after hours, and yellow ones means before hours. Okay, like pre-market. Now let's draw some levels here. Now this is Apple. Now if you see Apple right here, what's happening? On Apple, I can clearly see we are on a little bit of a downtrend right now on an hourly chart, but on a daily chart, it was pretty much in a strong uptrend, right? So now what do we need to see here is where the prices was rejecting or bouncing off the most recently. I don't want to go back 3 years ago. I want to just check the recent price action. So go on a line chart, as we on a line chart, and simply draw where the price literally turned around. See all these lines moving up and down? We need to draw towards the downside. We have a level right here. This is where the prices was, you see, have a little bit of hard time here, then finally broke, went up, bounced here, and literally made a big move. Another level would be right here. Prices came down, bounced off this, literally this spot. Now towards the upside, we have a level somewhere around right here. Why? Price was rejecting here, then bounced off here, then finally came back again. We bounced off here again, then finally had a little bit of hard time, and we are below it. Sweet. What else? I can see this area. You see this? Price had a little bit of hard time right here, and then moving forward, it rejected. Try to reject here again, but couldn't. And now we are approaching this area again, and here we are. All right. What else? What else do you see? Okay, I maybe see another level somewhere running around here. Reason, we had a little bit of hard time. You see this line is not smooth line, it's actually up and down. We'll go on a candlestick chart again and try to confirm these, but this is what I see for now. All right, okay, what else? What else do we see? That's pretty much it. That's pretty much what I see. Maybe there's another level somewhere. If you have to go find another level just below this, it would be right around this area. Why? Price was rejecting around here. You see this? Price rejecting around here, then bounced off this, rejected again, finally broke out. Alright, sweet. Now we have levels. Sweet. Now we go on a candlestick chart again. Go here, candlestick chart again. Now we have drawn these levels. Go on a candlestick chart again. Now we need to adjust these levels so they just look a little bit better. Now, what I mean by adjusting these levels simply means if it's 191.97, can we just make it 192? Sweet. This is 192.4. Can we just make it 192.5? I always try to go for the whole number. You see what I'm saying? If this is 193.14, can we just go at 193? Yes. See what I'm saying? If this is 193.47, can we go 193.5? Yes. This is 193.76. Now this is where the tricky part starts. Why? It's 193.76. Do we go for 193.5 or do we go for 194? What I'll usually do is if it's somewhere that far off, I'll just keep it 193.8. But I'm adjusting these levels a little bit so they are not just like, a big levels anywhere sitting in the middle of nowhere. They're actually whole numbers. This is another tip. Write it down. Algorithms love whole numbers. And a lot of algos are trading these days and they love whole numbers. Okay. Now, do you want to see actually what happens on a 5-minute chart? Because that's where I'm trading. This is how we draw levels. We go on a daily chart, check the bigger trend. Then we go on you guessed it right. Then we go on an hourly chart, we draw levels. And now when we are trading, we go on a 5-minute chart. But what's the plan here though? How do we trade this? What's the plan? I'll tell you what's the plan. All right. If the prices break below this level, 192.5, I can go short towards this level, 192, then 191.5. So what has to be the plan? Let's write down the plan here. Apple below, this is how I make my plan every day. Apple below 192.5. Targets, TG means target would be 192 or target 2 would be 191.5. But towards the upside, above, same thing, above this level 193, we can probably go towards 193.5. What's the target here? Target 193.5, right? And target 2, if that breaks, the 193.5 breaks, we can kind of catch another move towards 193.8. See what I did? Now I drew my levels. Now I have a plan on Apple. I do this for every single stock before the market opens. I'll write it down on a piece of paper next to me. I'll keep it on my desk. Now let's see how this kind of goes on a 5-minute chart. You ready? But before we do that, I just want to let you know that one very important thing, your lines don't have to be perfect. It's more about the general area. This is an area. This is a zone. Why? Because if I'm watching 193 as a level, but on the other side of the world, there's another trader that's sitting, he's watching 193.05. It's a different level, but it's still the same zone. And you are watching maybe 193.04. You see what I'm saying? It's never actually a line. It's always a zone. So don't just try to make it, let me find a perfect area. It's never going to be perfect area. Okay. And second point that I have for you is more times it touches a critical level, more stronger the level becomes. Okay. Think of that as a freshly frozen lake. If you keep bouncing on the freshly frozen lake over and over again, what can happen? You can fall right through. See what I'm saying? So think of it as a freshly frozen lake. More times it bounces on a level, more times it gets rejected off a level, more important the level becomes. Okay. But here, remember, sometimes these levels break. When these levels break, we try to catch the move towards the upside or downside. All right. Like we have a plan right now for Apple that we are watching below this level and above this level. All right. Now let's see on a 5-minute chart what's happening. Yeah, what was the plan again? This is the plan. We'll keep it right here. Market opens at 9:30 Eastern time. So right around here, we'll just move forward. Market about to open soon. Okay, we have 9:10. All right, here's 9:25. This is just before the market open. This is not at the market open. This is just before the market open. You see this? It's 9:25. Look at the bottom. 9:25 right here. It's not at the market open. It's just before the market open. When the market opens, the plan is still intact. Our plan is if it gets above 193, we go long. If it gets below 192.5, we go short. Okay. Now market opened. Look at this. This is where market opened. What happened? It went from this level. It tried to bounce. It never broke 193. It never broke 192.5 yet. So we are not in any play, right? Let's try again. All right. It never broke 192.5. That's why we're not short yet. It never broke 193 yet. So we're not long yet. It's all about patience. So now, okay, it's still in the middle of this zone. All right, sweet. Let's see if it breaks. Haven't broken this 192.5. It hasn't broken this 193. What are we doing? We stay in cash. All right, let's see now. The moment it this 192.5 level breaks, we go short. Okay, level broke. Now we can go short here with the profit target. First, the profit target is 192. What's the second profit target? 191.5. You see this target 191.5 and 192. Boom, we are short. There we go. We got a move. Let's see more. Okay, of a profit target hit. Sweet, of a profit target hit. See what I'm saying? And you got a move. We drew these levels in front of you, and this is how you catch moves. And this is where the profit target was, and this is where we get out. Right? Never hold a position beyond your profit target thinking it can go down. Take your profits, pay yourself some money. Now you see prices having a little hard time around our critical level. The reason why we have the critical level at that spot is because it's a critical level. Now price is having a hard time, we shouldn't be surprised. Now do you want to see how the day went rest of the day? We had a critical level here, prices had a little bit of hard time. Now we had a critical level here, 192.5. What happened? Price had a little bit of hard time right here. You see this? Price broke, bounced, sweet. A little bit of hard time. But moment 193 breaks, we can go long. That's a plan. There you go. 193.5 broke. What's the plan? 193.5, 193 breaks, 193.5 is the profit target. What level did it touch? Check this out, 193.5. Sweet. This is how important is how to draw levels and how to actually use these levels, right? I don't want to stretch this video too long, but what we did here was we literally drew levels on a daily chart, kind of had a rough idea what's happening on a daily chart. Then we drew levels on an hourly chart, right? Then we adjusted those levels, right? We adjusted them. If it's 191.53, we made it 191.5. If it's 192.8, if it's 192.87, we made it 193. You see what I'm saying? We adjusted those levels a little bit, and what we did, we went on a 5-minute chart, we traded them, right? Man, practice is gonna make you better every time you trade this. Practice every single day, and this is what we do. Thank you for watching, man. If you find this helpful, literally let me know in the comments down below so I know that this is the content that you like. Make sure you like the video, subscribe for more, and any questions you have, drop them in the comments and I'll get back to you. Right? Peace, stay tuned.